the tax reforms, government strategically wants to be able to mobilize more revenue. But over and above that, government needs to borrow. But if I were to advise government, I think more needs to be done around mobilization of revenue by monetizing government assets.
As the year 2026 takes shape, Waterhouse Coopers Nigeria, in partnership with BusinessDay Media Group, hosted an economic outlook session that brought together C-suite executives and industry to gain insights into development that will shape the economy.
Our 2026 economic outlook reflects the fruits of disciplined monetary policy, a level of stability many once thought was impossible or elusive. But we're not out of the woods yet. Stability isn't victory. It is a platform on which we must build hope, confidence, and sustainable growth. All the things we as leaders must nurture to make sure Nigeria's ambition is kept alive.
Our economy is at crossroads. A friend who is very good at watching the economy was telling me a story last year as the year ended. There was a delegation by the International Monetary Fund that had visited Nigeria and spent some time with it. And they asked the question, how is it? We have been to an office, met the managing director on the 4th floor, and we asked him, how is the economy doing? And the guy said, never been better. And as they left or exited the company, they spoke to the gate men at the gate. How's the economy doing? Never been this worse. And as you deal with policy directions, that you are looking at Nigeria and looking at the economy through more than one lens. That's one message that I thought I should leave with you.
Mr. Olusegun Zaccheaus, Partner, Chief Economist and Strategy and Lead, West Market Area, PwC, provided insights into the 2026 West Africa outlook.
When you ask us the question, how do you see this result in 2026? We don't see this result, right? We still have to contend with this significantly. Why? Obviously, you started seeing the political alignment given that 2026 election year. Some issues are supranational, which means the issue around terrorism, etc., and another issue that goes beyond Nigeria will continue to contend with that. So that for me may be a critical issue, downside for us to deal with in 2026. But if I move away from that and talk about the monetary policy environment, I think when I talk about this is where I get a bit excited because this is where we have more stability. And we expect that stability to continue in 2026. But it's going to be at a price, right? And that price is that interest rate will not go down as fast as we desire it to be. What interest rate will go down? It won't be like we're cutting maybe like 500, 600 basis points from interest. So interest rate will still be relatively high. And you ask yourself, why would that be? Obviously, we said inflation came down dramatically and it will continue to come down because that's our outlook. But there are other pressure points that I think the monetary side needs to pay attention to, which means money supply within the economy, which if you look at the statistic, pre-election, you always go up, right? So you need to manage that liquidity so that it does not really have negative effect on the FX. So what we see from monetary side is that it will be a stable environment. We also think FX will continue to be stable, but interest rate is where we'll see not going down as much as you see in other countries.
The 2026 Nigeria Budget Outlook and Insights was presented by Mr. Kenneth Irukume, Partner in Tax Reporting and Strategy Lead, PwC Nigeria.
Now they say one of the best ways to look forward into the future is to look into the past. So what was 2025 like? In particular, I think, one of the things that we usually look at and sometimes scratch our heads on is the metrics used and the assumptions used in the budget. And particularly from our side at PwC, we looked at the 2025 budget and sort of looked into our crystal ball and tried to make some predictions. Now, for 2026, we're still going to borrow. There's no magic wand we're going to wave. If the government is going to be able to fulfill those ambitions, then we're going to borrow. Geopolitics and what is happening in the US could impact the attractiveness of our government debt leading into the future, especially how it pans out with the appointment of the new Federal Reserve overseer and how that plays out. But obviously we still need to borrow, and some of the backlog we've seen coming out from 2025 still needs to be addressed. And the reset button that government needs to actually set may require, like I highlighted, mobilization of more revenue. One of the ways when I showed you that picture around dealing with that situation where your revenue is not commensurate with your expenditure is to ask for a pay increase or to change jobs. And that is what government has done with the tax reforms. With the tax reforms, government strategically wants to be able to mobilize more revenue. But over and above that, government needs to borrow. But if I were to advise government, I think more needs to be done around mobilization of revenue by monetizing government assets.
It featured a panel session on Nigeria's 2026 outlook, roundtable, and rapid insights.
You're going to get into that space where tax is the main conversation. It's no longer the back-end conversation, it's the starting conversation. What is the tax implication of what we're trying to do upfront? And if you see that relative to the value that will be eroded or added, you make a call whether the investment is worth it at all. And I can say the big investors out there, maybe Damadi here is very well ingrained of what is going on now, looking from outside in to say, we need to understand what is changing there. And that is going to be a very big part of the fundamentals that will drive whether investors will come or not.
We are moving, we have IQ, then EQ. We are now in AQ, adaptability quotient. How do you learn? We learn and learn again. So that bringing it back to this whole tax cycle is how quickly can you adapt your systems to take in all these nuances and learn so that you don't get exposed. Those are the internal things. From a regulatory perspective, I would say for tech, you can't regulate tech per se, because tech is innovation. But what I think would really be good is have regulatory sandboxes, safe areas for innovation.
Highlight of the event was the presentation of the annual 29th Global CEO Survey, Nigerian Perspective, and the launch of the Nigeria PwC CEO Survey Report. Some of the speakers at the forum and stakeholders shared their perspectives on the 2026 outlook and implications for the economy.
So a lot of the changes we've seen in the tax laws, many businesses did not get involved, right? You need to get involved in the changes. There's a version out now. The question is, rather than talk about it, how about you put your thoughts into writing and actually become part of the conversation where you're saying, these changes are not good for my business, right? So we need to be clear in our minds that advocacy should also become a key part of engagements going forward.
CEOs, executives, and leaders have to think creatively about how they develop talent, how they retain talent, and how you use technology and available talent to augment your process to make sure that you're ready and you're fit for the future.
I think the very important thing that every CEO or CFO must prioritize is around deal screening, how they are able to identify the winners of tomorrow. Because your ability to screen and identify the right companies will go a long way in setting you up for success.
Average age is 19 years old. So it is more than important that we begin to look at sustainability more strategically. Having laid this context, business then needs to start with their strategy. What is my sustainability strategy? What am I doing now to ensure that I am growing as a business and I'm future ready.
Of course, we cannot forget what's also going on in the financial services with the NIRA, that's on the insurance side, and then of course the banking recapitalization that is also currently happening. That in itself will also bring a lot of stimulation to our capital market. So it's a very, very bright and positive 2026. Investor confidence has improved, so people will be willing to start investing, and organizations can take, hold of this to help them increase their capital, the opportunity to be able to increase the capital that they need for their organizations, and financing to help increase productivity for them, as well as indirectly to the economy, and put a bright future for us as a nation.
For business to remain competitive, there are new things they need to do under the tax reforms. I think first of all, they need to understand the tax reforms and the changes it brings, and areas where they can find incentives that would help their businesses to thrive. There are areas within the tax reforms that have been designated as priority sectors. These sectors include agriculture, and for agriculture, the tax reforms provides tax exemptions for primary production. And then we have the other priority sectors where the government has earmarked certain amounts of investments that people need to make. When you make those investments in those sectors, the company gets 5% cash back from the government as a tax credit. Some examples of sectors under this group includes healthcare, education, agriculture again, manufacturing, mining, and so on and so forth. So the government is looking at stimulating certain sectors, and if you're strategic, you look at the opportunities in there.
And for us as PwC, we've identified 7 big trends, that will shape, the economy in 2026. But I'll just sort of focus on 3 big things that we think matter, right? One is increasing stability within the monetary policy environment, right? And what you call general macroeconomic stability. You see inflation going down, you see FX going down, and you see a certain shift, into a lower interest rate environment, not necessarily going down significantly. I think for me, that's trend number 1. Trend number 2 is what we call the uneven growth across economic sectors. Like if you look at the economic sector, there are some sectors in 2026 that will boom very strongly. For example, oil and gas, services, telecom, technology, right? And while there are certain sectors that may still lag behind, right? If you take, for example, certain element of the manufacturing, sector will still lag behind. So for us, that uneven growth is something businesses must pay attention to. I think the third point I'd like to sort of highlight is on the consumer demand end. We say consumer ability to spend, discretionary spending improving in 2026, but obviously the rate of improvement won't be as significant as we would have expected. So those are the 3 big trends, that we see will shape 2026. And the question is, how should business sort of respond to the trend? I'll just narrow on 3 big things businesses must sort of think about. One is they must make bold investment this year, right? The macro is getting more stable, right? Interest rate will become slightly lower, right? And this call for better time, right, to begin to make investment, so that the upside in demand that will happen in the next 1 year, 2 years, medium term, you will be prepared to sort of take advantage of that. I think the second point I think business must take into cognizance that given the significant amount of changes globally and within Nigerian context, they must think about reinventing their business model to tap the opportunity that you see in the market, right? How do you leverage technology to transform your business model, to transform your distribution model, to transform how you create value to your customer? I think the third point, which I'll mention that business must take into consideration, is how to manage the talent pool, right? When we did our CEO survey, availability of key skills is one of the key issues that CEOs mentioned, right? So each business must have a robust and proactive talent management strategy in this evolving AI environment.
With the need for policy consistency to achieve growth and stability in the Nigerian economy, major takeaways from the PwC 29th Annual Global CEO Survey, Nigeria Perspective, is the need for bold investment moves, the need to innovate to compete, scenario planning to build resilience against macro and geopolitical shocks, investing in digital and AI, building a robust talent strategy, and taking a proactive tax strategy and compliance approach.